2017, and prior to that also he has a very rich experience of more than 2 decades in advising the clients on various Indian indirect taxes and assisting on compliances in the consulting. He has an expert knowledge of GST, and his areas of expertise include optimization of supply chain from indirect tax perspective, tax advisory and compliance, tax health check and reviews and the due diligence projects, incentives advisory. He has assisted various companies in determining the entry strategy, marketing strategy in the Indian market from all indirect tax law perspective. And he has been advising various multinational corporations on the gamut of the entire indirect tax law in India. He has extensive experience of working on the European GST during his 14-month secondment to London. His service domain includes supply chain structuring, identification and strategizing of planning opportunities, advising clients on AEO, drafting representations for various government authorities, and providing litigation support on critical tax matters. He has advised and assisted multinational clients in claiming the benefit of concessional custom duty under the foreign trade agreements. He is a frequent contributor in leading finance and business publications as an indirect tax expert. He's advised and assisted various multinational clients in custom-related advisory services, including identification, appropriate HSN classification, and valuation of the imported goods. And besides that, he is a very unassuming personality. He will teach you things in a very, very simple manner, in a discussion type of a format, and you will never even realize that, such a complicated subject is being taught. And I'm extremely thankful to him that he acceded to our request and taking this session where both the professionals as well as the faculty member of various colleges are present. So thank you very much, Prashant, for being here. And I would request you to enlighten our participants with your deliberations. Thank you, and over to you.
Thank you so much, Sanjeev sir. Today I will be touching upon a very, very important topic, which is MOOWR and AEO. In present time, what has happened because of these unprecedented times, the businesses are going through a very bad phase. They don't have money. The supply chain has come to a standstill. There are fixed costs that you are supposed to pay. You are supposed to pay the salary. You are supposed to pay the rent. You are supposed to pay the minimum electricity bills and every other expenditure. So there is a fixed cost which is there on the business houses, but they are not getting the revenue because the circle has come to a standstill. There are very limited buyers in the market. The demand for the product has come down. The economy has come down. So these are extremely challenging times. And in this time, what people are looking for, how to revive the economy. One of the most moved question as on date in India is how we need to revive the economy. To revive the economy, the fundamental principle worldwide is you have to invest money in the market. The government has to pump in money into the market. So the people get money in their hands, they get jobs, they get money in their hands, and the money they get, they start buying the goods and the process starts. The circle of economy moves on. That is how the economy is to be revived. Now, expecting the government of India or any government to invest billions and billions of dollars in the market is not feasible, and it is not possible also. So now what happens is the government has to come up with certain schemes which can help the business houses to generate the money or at least cut down the cost. One such scheme is MOOWR. This scheme is more related to custom, which is indirect tax, but a significant part of this address the GST issue also. And since it is one of the biggest reform which the government has brought during COVID times, we are touching upon this subject of MOOWR. Now, what is the full form of MOOWR, first of all? It is Manufacture and Other Operations in Warehouse Regulations 2019. At the end of 2019, that is in November 2019, the government came up with a scheme called MOOWR. And they said if you are an importer of a good and you import the goods for the purpose of manufacture, then we give you an incentive and say you don't have to pay me the custom duties. Don't pay me the custom duty until unless you sell the goods in the domestic market. But if you sell this good or export these goods, in that case, you don't have to pay me any custom duties. This is what the mover scheme is all about. Now, the first fundamental question comes in. There are other schemes like this also, PPCG and other things. What is the difference between those schemes and this scheme? And why are we saying that this scheme is to an extent answer to the challenges that we are facing in today's life, that is the crunch of the working capital. Because as I said, working capital has come to a standstill. You don't have the money. Business houses don't have the money. So how this scheme is addressing that? Before I go ahead and explain you the scheme in detail, how it works, what are the procedural things, what are the open issues, what are the things that we should keep in mind, before I come to all those, the first and the fundamental thing is why this scheme was floated by the government of India. I take a step backward and take you to the past. In the year 2018, United States of America raised a concern and filed a complaint against India in the WTO, World Trade Organization. And they said there is a agreement which all the members have to sign, which is known as Subsidies and Countervailing Measure Agreement, SCM. And this SCM agreement says what type of benefits, what type of subsidies you can provide to uh, your exporters and importers. So it restricts a certain type of transaction that you cannot provide to your importers to exporters to increase the export of the country. There are certain violations to it. They say you can't do these certain things. What we can't do in the agreement that we have signed, on the basis of that, America raised a concern and they said that India is running a scheme like EPCG, Export Promotion Capital Good Scheme, or they have a scheme called SEZ, which China also have, by the way, which are the biggest in the world, EOU, Export Oriented Units, or MEIS, SCI schemes. Now, these type of schemes, they said, is the violation of the agreement, and they should withdraw these schemes. A committee was set up, a panel was set up by the WTO, and in 31st October 2019, they found out that the scheme which India is running is against the WTO agreement and they should be stopped with immediate effect. And when they say immediate effect, it means it has to be stopped within 120 days of passing of the report. Within 3 months, we have to stop it. Now, there was a very big challenge before the government. Most of the exporting community of India is either under EOU, SEZ, EPCG, MEIS, SEIS, and these are the incentives which make Indian business houses, export houses competitive in the market. If within 3 months we have to close down all these schemes, the exports will come to a standstill and the situation will be that India will not be having the foreign currency, much needed foreign currency, let me put it like this. We need a lot of foreign currency to run the business, to run the country, not the business, but the country runs of the foreign currency. Now that issue has come up. Immediately what government of India did, they filed an appeal and they said, we do not agree with the report of the panel and we want to go to the appellate body of WTO and said, see, the scheme is not correct. If you ask me heart to heart, we also know the schemes are not in line with the WTO agreement and probably we may be standing at the losing end. This is more of a tactic, which is my personal view, is to gain time. And we need time to come up with new schemes. One of the conditions of the WTO is until unless your appeal is decided, India is under no obligation to follow what the panel has said. So we have to wait for the order of the appeal, the judgment coming from the appeal. Then only we will say, okay, we have to withdraw the scheme. And as I said, this is more of a tactic to buy time. Immediately, what government did, they introduced a new scheme called MOOWR, manufacture and other operations in warehouse. And they said, if you have a factory anywhere in India, you have a factory in Indore, Baroda, Noida, Mumbai, any place, wherever you have got a factory, you take a custom bonded warehouse license and you can bring all the goods, whether it is capital goods or a raw material, into that bonded warehouse without payment of custom duties. Now, how GST is involved and what is the benefit of this scheme, I will explain you now. So, the one thing which I've explained you till now, why this scheme was originated, what is the genesis of the scheme to come into picture all of a sudden, and the genesis is very clear, is that government want to protect the Indian exporting house. If the other schemes come to a standstill, still you can convert yourself into movers and keep doing the business, and you're competitive in the market. This scheme works in two ways. The first way the scheme works is they say you can import the raw material into the country without payment of any custom duty to your warehouse. Keep it in your warehouse, that is your factory, you convert it into a bonded warehouse, keep the goods in your factory, keep on manufacturing. And say, for example, the manufacturing cycle is for 90 days, 3 months you take to manufacture the goods. Generally, in a business house, people keep raw material for 3 to 5 months in advance as a stock. So, if you are importing the raw material, keeping in your factory for 5 months, and then in 1 month you take in converting into a finished good, so it's a 6 months period. So, after 6 months, you are selling in the domestic market. The government of India is saying on the raw material that you have brought into the factory, you pay the custom duties after 6 months. If the scheme is not there, then upfront you have to pay your custom duties. Now the government is saying you take 6 months time. If that is the time you take 6 months time and pay me only when you sell to your customers in India. Now, if somebody says ki I am not selling into India, I am importing the raw material and I am selling the finished goods in the not in the domestic market, but I'm exporting it to other countries. The moment you say that you are moving the goods out of this country, selling to other countries, or you are exporting the goods, the government say you don't have to pay me any custom duty. So the custom duty which you are supposed to pay on day one, because the custom law says the day you import the duty, the day the goods crosses the custom frontiers of India, that is the time you're supposed to pay the custom duty. Now, there is a very interesting thing. Since I'm talking about the custom frontiers of India, there is a very important and interesting concept. What is the custom frontiers of India? Is it the 12 nautical miles of the sea water? The moment you enter there, are you in the Indian territory? Or it is the land of India? The moment my ships comes from the land, my goods are put down on Indian land, are imported into India? Or when I have brought the goods out of the custom ports, that is the time I have imported into India. For legal purposes, the custom law says the moment you are out of the custom bonded area, that is when we say the goods are imported into India. So when you have a warehouse, custom warehouse, private bonded warehouse, it is considered to be a place which is outside India. You don't have to pay the custom duties. And that is why we are saying that if you brought your goods to your factory, which is a custom bonded area, you have not brought the goods into the Indian territory. And if you have not brought the goods into the Indian territory, you manufactured the goods there and you are exporting it out, then the goods never cross the custom frontiers of India, and there is no question of paying any custom duties. And it is not only the custom duties, it is the IGST, which is 18%, which is applicable on import of goods. Now, the connection between IGST is here. Custom duty generally is around 7.5%. Certain product is goes up to 10% also, but generally it is 7.5%. Whereas IGST is 18%, which is applicable in the Goods and Service Tax Act. So GST is 18% and custom duty is 7.5%. Now this 18% is actually a killer, because you see, if I'm going to import a, say for example, plant and machinery, capital goods I'm importing, I have to shell out 18% immediately on import, and then it takes time for a plant and machinery to get installed. So maybe we got the plant and machinery today. It took around 6 months to a year for the factory to start or the plant and machinery to get installed. So you have paid the duties on day one, but you are going to get the input tax credit availment only when you are going to manufacture the goods from that factory, and then you start selling. Day one, when you're going to start selling, you are not going to sell so much that you are able to set off the IGST which you have paid on the import of capital goods. So there is a huge blockage of your money of a businessman the day you import the goods in the form of custom duties and in the form of larger form of IGST. Now this scheme further extends, and they says कि if you are importing a capital good for your plant, then they are saying you don't have to pay me the custom duties. You pay me the custom duties only when you are exporting you are taking the plant and machinery outside your factory. Now, when I say outside the factory, that means I got a plant and machinery, and the life of the plant and machinery is 30 years. After 30 years, it becomes obsolete. It is nothing but a scrap for me. So the government of India is saying, you use the plant and machinery for 30 years, install in your factory, don't pay me any custom duty, don't pay me any IGST, don't pay me any of these two things. Keep manufacturing the goods in your factory. And after 30 years, if you are removing this plant and machinery and selling in India as a scrap or whatever it is, that is the time I'm going to ask you to pay the custom duty. Now, this scheme is a boom for most of the business manufacturing houses which are in the process of exporting the goods, manufacturing and exporting, or even for a domestic sale. I take an example here. Through an example, a case study, I will show you how the scheme works. You see, if there is an investment of 1,000 crore by a business house, and they import plant and machinery and capital goods in the country, say for example, the value is 600 crores. Basic custom duty, assuming it is around 7.5%, I'm not taking 10%, but assuming 7.5. So it is 45 crores of the basic custom duty that you are supposed to pay on day one. The goods crosses the custom frontiers, that is, the goods are out of the custom house. And simultaneously, you have to pay 116 crores. Now, as I said, 45 crores and 116 crores. This money, if you are under a MOOWR scheme, you don't have to pay. Almost 160 crores plus, you don't have to pay to the government. And this you are supposed to pay after the life is over of the plant and machinery. Now, if I tell any business how that 160 crores are saved immediately, now this is only a deferment. Let me explain here again. This is deferment. You are supposed to pay these two taxes, duties and taxes, but that is only after a period of 30 years or when you are actually taking the plant and machinery outside your factory and selling the domestic market. That is the time. It may be 30 years, it may be 10 years, it may be 2 years, whatever the period is. Whenever you are going to remove these plant and machinery and bring into the Indian domestic area, that is the time you're supposed to pay. This 116 crores is very important. Now, somebody can argue that this is in any case an amount which I will get a set off, and totally agree. This is a correct statement to make. It is a pass-through cost, 116 crores. Basic custom duty is a sunk cost, but 116 crore is a pass-through cost. Now, what do I mean by pass-through cost? When I'm going to manufacture the goods out from using this plant and machinery, the amount of good that I sell in the market, on that amount, I have to pay the GST to the government. From that GST, I will say to the government that I've got 116 crore GST, which I've already paid on buying this plant and machinery. And hence, I will get a set off. Suppose I have to pay 10 lakh rupees in a set off. Then I will say I've already paid 160 crores. 10 crores you adjust from there. Now I have to get a credit. I got a credit in my books of 150 crores. So what is actually happening is this 116 crores will keep on moving for a number of years. You have paid, say for example, on 1st of April 2021, you got the plant and machinery and the factory setup. You have paid these duties to the government. Assuming if you're under an ordinary DTA scheme, now there is no point in paying this. The government is saying you come under MOOWR, take a deferment for this, and you start paying me later on. Slowly, when your sales goes up, your this amount of 116 crores will get set off. Our experience is whenever a plant and machinery is put in, and then I'm making a very general statement. This is the experience that we have. It takes around 2 to 3 years for the input tax on the plant and machinery to get liquidated. What do I mean by liquidated is when I am being able to sell so much goods in the Indian market that my input tax credit, that is 160 crores, get dissolved. Oh, sorry, 116 crores get set off. That is what I mean by liquidated. So this will take time. If you are under the MOOWR scheme, you don't have to pay this money at all to the government. It is only in the installments. Slowly, you are going to move the goods out of your factory when you are going to manufacture and sell. That is the time you pay to the government and take a set off. Similarly with the basic custom duties. So this is an excellent scheme drawn by the government of India, which is helping the Indian houses to save the IGST, integrated GST, and the basic custom duties. So your cash flow issue to an extent is addressed. This gives impetus to the industry to set up a plant and machinery and get the new plant and machinery. Say company like Dabur, they have done a very good business during COVID time because of their wellness product. The sale has gone up tremendously. The demand for their Ayurvedic products have gone up tremendously, and so forth for so many other industries. The sale have gone up like anything. When the sales have gone up, they are in the process of putting up new plant and machineries, new factories, expanding the business. And that is the whole idea the government of India has. The more you set up, the more employment is generated, the more you are able to contribute to the Indian economy, and the economy will come back on track. As you all know, the GDP has fallen down by 23.9%, which is a huge figure in itself. But we will be able to recover very fast if we have schemes like this and we are able to generate employment for most of the people. The biggest problem at this moment is the employment. So if we are setting up the factories, giving more employment to the people, the demand circle will move fast and we are back on track. That is why in the starting I was saying this is a very important scheme, not totally into goods and service tax, but related to it. And since it is a new concept which is coming to the market, it is the most saleable thing in the market, the most sought of thing in the market, and that is why it was important to imbibe the knowledge. And it is better for me to share the knowledge on this particular subject. Now, if I go a step forward, how do we apply for an application? How we get applications cleared from the department? What are the steps? The first step that we have to do is we file an application in Annexure A. When we file an application, obviously you are not paying custom duty to the government. So government want to be very clear on the bonding part. What will happen if I allow you take the goods to your factory and somehow the goods get sold from there? And without government knowing that the goods have been manufactured, the raw material being used for manufacture and the goods are sold, no custom duties has been paid. So the what government says is you execute a bond with us. And that bond is nothing. You don't have, it's not a bank guarantee actually. Your money is not blocked because the whole idea is that your money should not get blocked. So what you do is you give a bond to the government. And that bond says, on an average, this is the raw material that I will keep in my factory. This is the amount of custom duty which is involved here, which I have not paid to you. I give you a bond that I will maintain the records and maintain everything. And if it comes down, then I will pay you the money bonds. So the bond is only an assurance to the government of India that we can give you the money as and when required if my holding goes down to a that particular level. Say for example, I said I will keep 100 units of raw material. On 100 units, 20 rupees is the only 20 rupees the custom duty that I'm supposed to pay and GST I'm supposed to pay. So I give a bond of 20 rupees. The average, this is the amount that will stay in my factory. But if it falls down below this level, immediately I have to increase the bond value. I have to say, okay, I will pay. And this is again for the purpose that tomorrow somebody try to be smart with the authorities and try to steal the good, do not pay the duty, then the government has a bond and they have the right to get it executed in the law of court and get their money back. So the second step is that we have to execute a bond, which is an guarantee it will be. Step number three that comes in that the immediately on filing these applications, the custom officer will come for a visit. He will say what type of goods you are getting, what is the factory size, what are the different areas he will look at, security he will look, site plan he will look at, and so on and so forth. So they will come and they will look everything and what manufacturing process you are going to do. And then they are going to say manufacturing is very important. By the way, this scheme is not for trading purposes. When we say it is not for trading purposes, the idea of the government is to generate employment as well. And that is why the government is saying you go by the scheme, you put up your factories, give employment to the people. And government is not asking you even for a second that you have to pay the amount to the government back in the form of like other schemes, 6 times of the custom duty say we have to do an export or 15% value addition should be there in case of raw material. No export obligation is attached. No export obligation. Only obligation attached with this is that you have to maintain proper records. There has to be a housekeeper. There has to be a lock and key the good should be in. Why? It is only for security purposes. The goods that you are keeping in your factory without payment of duties which you owe to the government, they are safe. So only to that extent the government is talking that I want a security of the duty which you have not paid to me. That is all. So the step three is where the officers come and he visit your factory and see everything is in order or not. And once he is satisfied, then he gives you a warehousing code. So in all your declaration, on your shipping bills, you have to put this code number so the government will immediately come to know who is importing these goods, and when you are exporting, the government will come to know, okay, from which factory the goods have been exported. So these are the four broad steps that we have to keep in mind while we go for a MOOWR scheme. Now, there is one very interesting thing here which I will speak in detail later on, and that is with regard to how the custom duties will be calculated. When I say that you have to pay the custom duties at the time of removal of finished goods, you have not paid the custom duty on the raw material, that is the deferral part. So how you will calculate it? when I'm supposed to pay the custom duty and in what value. So that will come at a later slides. Now, what are the other compliance measures? Once you got an application in place, then the government is saying that you should have a warehouse keeper. A warehouse keeper is somebody who is going to take care of the warehouse and the goods are kept within the factory. He will be in charge for the lock and key, and he will be having a detailed signatures from the Customs Act under the Customs Act. So this house warehouse keeper we have to employ, the business houses has to employ. The government is saying, I am not asking you that the warehouse keeper should be ex qualified or he should be an ex customs man or something of that sort. So there is no qualification which they have put in, but they said that there has to be a warehouse keeper who will be the custodian of the goods because the custom duty is not being paid. That is more important for the government. Then they are saying, okay, I need a monthly return also. By 10th of the next month, you have to file the returns. So what government is saying that you keep on doing your business in the regular course of business, that you are getting the raw materials, you are getting the goods, you are getting the
There is some technical glitch. Sir will be joining soon.
Dr. Anshita, we wait for 2 minutes. Otherwise, I'll make a call. I think he must be trying.
Sure, ma'am. Sure, ma'am.
Hello? Ji, sir, you have lost the connection, sir. Okay, thank you, sir. Thank you. Dr. Anshika, sir is trying. He'll be back.
Yes,
I'm
ma'am.
on lookout for him in the attendee.
Yes, ma'am.
Once he's there, we'll just make him. I'll join him.
Yes, ma'am. Yes, ma'am.
Sir is back.
Yes, ma'am.
Anshika, I'm making you the host.
Yeah.
Yes, ma'am. Yes,
Can you
ma'am.
hear me?
Yes, sir. Yes, sir.
So you can share your presentation, sir. Anshika, make me the co-host.
मैम आप ही को होस्ट है आप है
हाँ, ठीक है. Okay.
Can you see the presentation?
यस सर
Yes, sir.
Yes, sir.
The presentation is visible, sir, and you're audible. You can, sir, continue, sir. Thank you.
So, as I was explaining that monthly returns has to be filed by 10th of the next month. And then there is a process of one-time lock. Now, what does one-time lock means? That when the goods are coming from the customs to your warehouse, your factory, they will put a key and lock and they will say, I want to ensure that the goods are absolutely safe and nobody has opened the lock. If the lock is open, then the warehouse keeper will not keep the goods in the factory. And that is a very, very sensitive and important things to be done. Because the custom authorities want that I am giving you all the facility of taking the goods, not paying me the custom duty, but in return, I want the protection of the goods. Similarly, then they say that you have to maintain certain records. And those records have been prepared, the format has been prepared by the custom authorities. The government has prepared the format. He says, I need the record in this format. It can't be your own format, it is the government prescribed format. And then they say there has to be a bond. Plus then comes the important thing is input-output norms. Now when I say input-output norms, what is the importance of this word? The importance is that when you're going to pay taxes to the government, you have to tell the government that if I manufacture 1 unit of finished goods, how many units I use, how many units of raw material I use to manufacture it. Say for example, in manufacturing 1 finished goods, I say I use 10 units of raw material. So the government of India will say, okay, on these 10 units, when you're selling this 1 unit in the open domestic market, you pay me the custom duty on the 10 units of raw material on which you have not paid the duty. So input-output norms is the norms which says how many goods I will manufacture from the raw material. So how many input and what is the output. That ratio is known as input-output norms. That is what the government is going to control. Then there comes an audit. How the government will control the records? The government is prescribed that you have to keep my goods in the safe custody. And then they are saying, I will not put any of my man at your factory to ensure that the goods are going out of the factory. So he has to sign and verify. That is not going to happen. It was earlier, we used to say the clerical Raj that was there, where we used to have the bureaucrats or the people in the lower authority of the government sitting in your factory and in the excise purposes signing, okay, these goods have paid excise duty, they can move out. Those things are not there. So they are saying once a year I will come and do an audit. And I will see your records, what your records are and how much duty you have paid. So once a year that has to be done. Then they are saying we will maintain the record for the next 5 years. This is again a very, very important thing. Why it is important? Because it is giving me a clue that government can open my audit or open my file anytime till the last 5 years. If they found there is some problem in my records or there is something which I have missed out, the government has full right to ask me, I will open your accounts for the next 5 years. So they will say, and that is why they are saying, please maintain your record for the next 5 years. And when they say record maintenance, it means even in the digital form, they should be there. They have prescribed in a fashion, they says, wherever you are keeping your hard copies, I don't want your soft copies to be there. So if suppose there is a theft or a fire or something happened, so all the records are gone, whether it is hard copy or soft copy, that should not so happen. The soft copy should be maintained in a different place and hard copy should be maintained in a different place. So that tomorrow if I need your records, I should be able to see that. Similarly, the facility, equipments and personals. Now, like the warehouse person, he should have a e-digital signatures. There has to be computerization because accounts will be kept on the computers and these type of facilities. So the government is saying, I will give you the complete benefit of not paying me the IGST, don't pay me the goods and service tax, integrated goods and service tax, don't pay me the custom duties, but in return, I want the security of my goods and the compliance should be there so that I am ensured that the things are safe. Now, this is a chart which we have prepared to educate most of the people to understand what are the timelines, what I am supposed to do and when, and under whose authority it comes. The first is execution of bond in Annexure C. That is the bond that we spoke about, that when we are going to file an application, we have to give a bond to the government. That will go to the bond officer. Bond officer is a person who is in charge of your bonded warehouse. It is a custom authority guy, but not a very senior person. So the application has to be filed there, the custom bond has to be filed there. And that is to be filed on or before completion of utilization. It should not so happen that you have brought the goods, all the raw material has been finished and then you are going to them. This is at the time of filing of the application obtaining license, you have to execute a bond. Then comes monthly return. As I said, it should be within 10 days of closing of the month and the authority to whom I have to give is the bond officer. Acknowledgement. Confirming goods have been deposited in the warehouse. When the goods are coming from the custom port to your warehouse, it says within 1 month. Where the goods have started the journey from the warehouse, it should be told to the proper officer and the bond officer. Proper officer is in charge of the custom station. Every area has got a custom station. So the in charge of the custom station, who is a senior person, is a proper officer, and the bond officer is the person who is in charge of the bonded warehouse. I have to inform both. Why the government is given a leeway of 1 month? Because if the goods are coming to the port of Mumbai, and then it is going some far off place in India, say for example J&K, or the goods have come to Tamil Nadu port and they are going to J&K, long distance. It will take time for the goods to come out of the factory from the custom port, getting loaded on the vehicles, and the vehicle will move. If it is a big heavy item, it will move at a very slow pace. So the government has given a time of 1 month. You take 1 month and within 1 month tell us that the goods are going to come to my place. Then comes the acknowledgement confirming goods have been deposited in the warehouse. Once the goods have been reached and you are putting in the warehouse, you have to inform the locational bond officer that the goods have come into my warehouse. And that is within 1 month. When the goods have come in, within 1 month you have to tell him. Acknowledgement by the purchasing officer confirming goods have been arrived at the custom station for export. If it is export, you see that in most of the cases, the bond officer to whom you have to inform. Within 1 month, you have to inform him. Intimate, change the board of directors, contact details, bank, any such thing, you have to tell the bond officer. So this has changed. Why it is important in case of board of directors? Because these people are personally become liable to pay to the government. In case there is a problem, the authorities have got the right, which is known as corporate lifting of the corporate wheel. Now, lifting of the corporate wheel means that I will go behind the wheel and see who are the people in charge. So, board of directors are the in charge. The board officer will say, I will come to you and you have to clear the goods. You have to pay me the custom duty if you are not able to pay me. That is why intimating the chain of board of directors is very important. This period timeline has not been described. Within how much time, but generally in the company's law, it says immediately. You have to explain, you have to tell that the board of directors have changed. Immediately or rather it is 15 days. There are two things out here. So we generally say it should be immediately. The moment the board of directors have changed, you need to inform them. Intimation of change in input output norms. Now there is an efficiency which keeps on coming into the business. So if you earlier said that I will take 10 units to manufacture 1 unit of finished goods, now the efficiencies has come in, and now you are saying I will take 8 units. So you have to inform them that within a certain time period, which may be a week or 10 days maximum. If the period is not prescribed, it's generally week to 10 days, where you have to tell them, look, there is efficiency come in. Now I will use 8 units to manufacture one finished goods. What is the advantage of this? Advantage is you have to pay the custom duty at a lower rate now. Because earlier you were paying custom duty on 10 units, now you have to pay the custom duty on 8 units. Then come if there is any discrepancy in the goods which has been received. Within 24 hours, you have to tell the board officer that there is a discrepancy. In case of one type lock is not found intact when the goods are coming to your bonded warehouse, if it is not under key and lock, it has broken, immediately you have to tell the bond officer. Give intimation form of transfer of goods from warehouse to a custom station for export. If it is for export, before removal of goods, you have to tell the bond officer that I am making an export. So before making export, you have to tell him. So these are certain timelines, important timelines that we should be aware of. Now comes the important question which I was trying to raise at the time. How I will calculate the duty? For the purpose of calculation of duty, how much I am supposed to pay to the government when I am clearing the finished goods for home consumption. So they said it is the quantity, it is the valuation and the rate of duty. When I say quantity, the government wants to know the input output norms. Whether on 10 units I am supposed to pay the custom duty or on 8 units I am supposed to pay the custom duty, and that is what I have told the government actually. So my input output norms are so and so. I will use so many units of raw material to manufacture one finished goods. So that is the quantity. The second comes the valuation. On what value? The value which you have declared in the bill of entry is the value that we take. Okay, this is the value, and it has to be in conjunction of section 14 of the Customs Act, which is nothing but the value at which you have imported the goods. That is the value on which you are supposed to pay which is including your freight and insurance. Customs CIF value is what we call as cost, insurance, and freight. All three are included. That becomes your value on which you are supposed to pay the duty. Now comes at what rate? The rate is the one that you are supposed to pay at that time. Say for example, on 23rd of November, you are exporting the goods, you're taking the goods out from your factory. So whatever the custom rate that is there equivalent on 23rd of November, that is the rate that will be applicable. This is how we calculate the duty that is supposed to be paid. Now, what are the records that needs to be maintained? So I have covered most of them. What are the records? But certain things which I will like to reiterate. Bill of entry, through which you have got the goods into the factory. Transport documents. If you are transferring the goods, then those documents. Again, if you are transferring the bill of export, shipping bill, these type of documents which actually evidence the movement of goods either incoming or outgoing. Because that is what government is interested in. They want to know how many goods have come in, how many goods are going out. This is what they are interested in, and that is what the government is saying. You only tell me and keep the records to that extent that the goods, how many goods came in, how many goods went out, and how much tax we have paid. So anything related to these movement of goods, any documents, those has to be maintained. And as I said, it is important that for a period of 5 years you have to maintain it. Now I give you a few minutes to look into this chart. This chart is something which I spoke till now in the last 40-45 minutes. It is a gist of the complete MOOWR scheme. What are the benefits? How I get the benefit? How I calculate the duty? What type of records I have to maintain? It covers everything. I give you 2 minutes to have a look at it, then I will quickly explain it. Now this process flowchart, in the between you can see there is a private bonded warehouse, which is your factory. You have gone to the government, said, this is my factory, I want to take a custom bonded warehouse license from you, and I got this bonded area. Once I get the license, I can get the raw material from outside the country where you see the vendor. He is outside India, you can bring the goods from outside India without payment of custom duty. There is a DTA vendor. Does it debars you from buying the raw material from India also? The answer is no. You can buy the goods from India also. The goods can come from a DTA market, that is domestic tariff area, after payment of GST, which is applicable on the goods. You bring that raw material to your factory. There may be some other custom bonded warehouse where the goods are kept and you want to buy the goods from that bonded warehouse rather than from other company. The goods will come from there as well. So what you see as a third arrow, other custom warehouse, so these are the input of the raw material into your factory. Now, once you have manufactured the good, there are three things that you can do. You can export. So you can export the goods under a lock and key without payment of custom duty outside India. Another thing that you can do is whatever you have manufactured, you want to sell in India. So the government of India is saying when you sell into India, you have to file a bill of entry for home consumption. Now this is the time when you are supposed to pay the custom duty and IGST on the raw material that you have bring into your factory on which you have not paid it earlier, because you have got the custom bonding warehousing done for your factory. So that is where the custom bonding warehouse comes into picture. So you don't have to pay it. At this time, when you are taking the goods to the domestic tariff area, that is the time when you have to pay the custom duty. You have to pay the custom duty and IGST to the government. Apart from this, the local GST, which is applicable in India, you have to pay that as well. So there will be two different things. One is a commercial invoice that you will send it to your buyer in India. This is the goods I'm selling you. This is the IGST I'm charging. Another, I have to submit with the custom houses, that is the Commissioner of Customs, saying that this is Judicial Commissioner of Customs, saying that this is the goods I have taken out for home consumption and I'm paying the basic custom duty and the IGST, which I have not paid on the purchase of the raw material from outside India. So I'm paying now. So there are two different documents that is to be prepared here. And then the other way you can remove the goods out of the factory is to shift them to other custom bonded warehouse. If you shift to another custom bonded warehouse, then also you have to tell to your bond officer that I am taking the goods out of my factory, taking to another custom bonded warehouse, and from there I will sell it further. So one-time lock, other documentation, those all are required when you move the goods. So this chart actually depicts from where the goods will come in, the raw material will come in, what will happen to the finished good. There are three ways the finished goods goes out, then what are the scenarios. So this is a complete understanding of MOOWR. Now I take you to certain issues out here. Now whatever we have read or whatever I have explained till now, it all looks very nice. Yeah, I can bring the goods without payment of custom duties and IGST, and government is helping me to promote the business. Government is in return asking me to protect the raw material, protect their interest. That is fine. But there are certain challenges also. What are those challenges? The first challenge that comes in is with regard to income tax on capital goods. Now, say for example, you have brought the capital goods. In one of the examples which I have taken, the value is 600 crores for plant and machinery. Now, for 600 crores, you are supposed to pay, you have not paid the custom duty of 45 crores. and 116 crores of IGST I have not paid to the government. The government is very serious about its money. When you go to the government while filing your balance sheet and profit and loss account, you will say that there is a depreciation on the capital goods. The issue comes in for the capital goods under the income tax. What should be the depreciable value? On what value I am supposed to put a depreciation? 600 crore is the value of the plant and machinery in my example, but there was 45 crore rupees of custom duty also and 100 crore rupees of IGST also. Now, if I say I am not going to capitalize IGST, that means I will use it for the payment of the GST that will have on the sale of goods. If I say so, then on 45 crores, I have not paid, I have not capitalized it till now. I have not paid the duties to the government. Now, if I have not paid duties to the government, this is a case where duty is applicable but not due. I know that I have to pay this duty to the government. It's only deferment. I have to pay to the government this duty, this 45 crores. But where it is due only when I'm going to sell it. So if it is due only when I sell it, am I entitled to get the income tax depreciation on this value immediately? That means in a particular financial year, I will say 600 crores is the value of the plant and machinery and 45 crores is the custom duty, which today or tomorrow I have to capitalize in any case. And I will charge custom duty on 645 crores. Now, if I am going to charge depreciation on 645 crores, my profit to the extent of 45 crores, which I've added here, will come down. So on what value? This is a big question mark out here. Then comes the accounting of custom duty of raw material. Custom duties, when you are going to pay, how you are going to account in the books of accounts. That is another issue that comes in. So there are two major issues if I see in the impact assessment that we do. These two things come up. What should be the value of depreciation and how the custom duty on raw material needs to be accounted. Obviously, there is no brainer now that this is a very, very good scheme to save the cash flows. Deferment of duties, or even in certain cases when you are exporting the goods out, there is no duty that is to be paid. In my example of plant and machinery of 600 crores, if I am saying 45 crores is the duty which I have saved, that is excellent. I have saved 45 crores of duties. But I have to pay one day when I'm going to sell the plant and machinery in India. Can I devise a scheme where I say the businessman, I will not sell this scrap in India. I will get a dealer from Bangladesh who is going to buy the scrap from me from India at a lower price. If I do that, then I don't have to pay 45 crores to the government, which is the custom duty which I have saved on it, or 118 crores of the IGST, because that I will pay to the government only when I sell the goods in a domestic market. I'm not selling the goods in a domestic market, so why should I pay these taxes? So can I devise a scheme where I say I will use the plant and machinery for 25 or 30 years, and after 30 years, I'm going to export it out. And the moment I export it, there is no duties, neither custom duty, neither IGST. So the question comes in how to do the accounting of the custom duty on the raw material. That is a separate issue. Now, what are the transitional issues that come up? The transaction issue concept is if you are already having a scheme called Export Promotion Capital Goal, EPCG, this also entitles you to get the capital goods into the country without payment of custom duty. If there are certain goods, then how I'm going to account in my books now? Because I got the whole factory custom bonded, which already have certain goods which are not imported under the MOOWR scheme. So what we do the bifurcation. This is under the EPG scheme and this is under the MOOWR scheme. And that is why the government is saying I need to maintain a complete record. I need a transparency, how many goods have been come in and how many goods have been sold out. So we do a demarcation here. Similarly, they are saying that for advance authorization, you can get the raw material without payment of custom duty, but the condition in AA is that you have to do 15% of value addition. Now I have moved to a MOOWR scheme and certain raw material are lying, which I bought under authorized advanced authorization scheme. What will happen in case of AA scheme? the government scheme, you keep that record separate. These are the raw materials which I have brought under A scheme, and I have to fulfill my obligation there. So that is a separate scheme. So these type of transition issues come in. Operational issues are simple issues like warehouse keeper appointment, bill of entry needs to be filed, warehouse keeper should have a digital signature, and so on. So these are certain key issues that we have to keep in mind. Now, at this juncture, when we are almost at the fag end of a MOOWR scheme, we try to analyze. There are two other schemes which are very common in India. One is for capital goods and one is for raw material, which is already there. Then comes the MOOWR scheme, which is a new scheme, which is both for raw material as well as for your capital goods. If I see physical location is not relevant when it comes to MOOWR or when it comes to advanced authorization or when it comes to the EPCG scheme. These things are not relevant. Now, the second issue that comes in, export obligation. If you look to under the EPCG scheme, you have to fulfill 6 times the value of duty saved. In my example of 600 crores, if you have saved 45 crores, then 6 times of 45 crores. That is the money, that is 270 crores. Value of export has to be there. If that is not there, the government say that you have not fulfilled the obligation and you are liable for interest and penalties. So there is a catch in EPCG scheme. Similarly, in advanced authorization, if you're getting the raw material, there has to be a value addition of 15%. If the value addition of 15% is not there, then you have not fulfilled the obligation. And again, you are supposed to pay the interest and penalties. You look to the duration of import. The duration of import is in EPCG is 18 months and in advanced authorization, it is 12 months. Nor compare it with MOOWR. MOOWR, again, no restriction on the physical place. You can get both the raw material and the finished goods. Then there is no export obligation attached, and that is the biggest catch. The best thing out here is there is no export obligation attached. You don't have to worry, I have to export so much, I have to do the value addition to that extent. Nothing is required in the MOOWR. And that is why this is such a common and most saleable and most liked scheme in the market as a date. Everybody wants to go on a MOOWR scheme. There is a certain industry, if I can categorize to an extent possible, is the pharmaceutical companies. The pharmaceutical industry is not so much inclined for movers because they have got back-to-back export obligations. Most of the manufacturing companies, the big pharmaceutical companies, they are not only manufacturing the goods for India, they are exporting a lot of goods. And they got a running contract with US and other part of the world where they are saying we will import and we will export the goods. So under the MOOWR, these type of people, they don't want to go under the MOOWR scheme, pharmaceutical companies which are into manufacturing and they have got large exports because they can easily fulfill the condition of 6 times the value of export of the duty saved because they are under exports. Similarly, if they're getting the raw material, 15% value addition is very common in the international market. If you are selling the goods from India to overseas after manufacturing, on an average, you can assume a benefit or a profit margin of 50 to 100%. This is a very nominal one. It's not something very surprising that if you're into export business, getting a profit of 50% and above is a very common thing. So 15% value addition on import, that is also fulfilled. So there are 1 or 2 such sectors where the MOOWR scheme may not be so common, but for rest of them, this is a very common and very, very important scheme. Now I come to the last leg of this scheme, which is a very procedural one, and that is why I've kept for the last minute. It says, I'm just not reading it out completely. I just let you to have a look at it and read it because it is more on how the goods will move. Now, the first one I take, you are going to import the raw material. Then what actually happens? We place a purchase order on the vendor. We receives a confirmation, okay, the vendor is saying, I will sell you the goods. They dispatch the goods and they send the commercial documents to you. Once the commercial documents are received by, we file it, we prepare a bill of entry and we file it. Once the bill of entry is filed, I go to the assessing officer and say, look, I have got these goods into the customs. Now I want to get it cleared. They will put the proper officer will put a lock and key while transporting the goods on the vehicle. That vehicle will come to my factory. The warehouse keeper and they will check whether the lock and key is correct or not, and we will bring the bond officer to check it. If it is broken, we need to inform the bond officer immediately. The goods which have come from the custom, the lock and key is broken. If it is not broken, the warehouse keeper will say, okay, it is fine, I will keep in the warehouse. So this is a cycle which happens in case of imported goods. Similarly, is the procurement of goods from other bonded warehouse. If the goods are lying in other bonded warehouse, this is the cycle that we follow. This is finished goods for export. I just get a glass of water for myself. Okay. The removal of red goods for home consumption. This is slightly different because, as I said, when you are going to remove the good for the home consumption, you have to file an ex bond bill of entry for home consumption, telling the authority that I am removing the goods for home consumption now, and I will pay the custom duties accordingly as per Annexure B. If I transfer the goods to another bonded warehouse, this is the process that we follow. This is the flow chart. Now this is for removal of imported goods as such. There may be an issue that comes up. Say for example, now this is a case where we are saying that we have imported the raw material and we have not transferred the goods. We have imported the raw material, but we have not used for manufacture, but we have removed the goods as such without doing any manufacturing process. There can be a number of reasons. I have stopped manufacturing those finished goods which I used to manufacture earlier, or it can be anything else. So in that case, the government says that this is the form in which you have to tell me that you have imported the goods without payment of custom duties and you are removing it as it is without doing anything. But if you are exporting it out of the country, there is no problem. But if you are selling in a domestic market, you have to pay the interest also and the basic custom duties and the IGST, everything, because that you have not paid earlier. Now, this slide is only for the professionals or the practicing chartered accountant, lawyers, company secretaries, anybody who is practicing. For him, this slide can be important. It says, what is a role of a consultant in a MOOWR scheme? The first thing is we help the companies in getting a license. We will select, okay, this is the factory, you need a license. Then what all documents I need to file, as I explained, what is the step involved, we carry it out and we get a bonded warehouse. Then standard operating procedures, because this is a new thing. The company management does not know what are the standing operating procedures, who is supposed to do what. So that is the second thing which comes up, which we help the clients with. We prepare a standing operating procedure, how the goods will come to your factory, how it will be stored, what are the document that has to be maintained, what will happen at different time, the timelines which I've talked about in one of my slides, all those things, standing operating procedure we prepare. Then we provide training to the company personnel, because most of the people in the company are in a mode of routine things. I come to the factory, I punch my card, I enter the factory, this work I do. Now, if you're asking them to do something different, then it is very important that you have to tell them what is different. So we have to do a training for them to explain how the life will be, what is the new normal, as we keep on saying these times, in these times. So that is the training that we have to provide. Then comes the assistance in protocol compliance to undertake in respect of carrying out the manufacturing other operations. Protocol compliance means every 10th of every month that you have to find the return. The consultants are going to help the industry people in doing that. And then come the on-call advisory. Now, when we talk of on-call advisory, is they will ask you, can I send my goods from outside the factory for the purpose of job work? Or can I get goods from outside the factory on a job work basis? Since I'm a custom bonded warehouse, are there any other obligation that I'm supposed to fulfill? Is there any precaution I'm supposed to fulfill? These are the on-call advisory. So there will be new transactions be coming in. Say, for example, you are getting dies and molds from some other factory. Dies and molds are not owned by you. They are not purchased by you. The ownership lies with the third party, but they are installing the dies and mold in your factory. Is it allowed in the custom bonded warehouse? If yes, then what is the procedure I need to follow? These type of advisory work comes in. So this is an important slide, as I said, for the practitioners. Now I come to another important issue, which is known as authorized economic operator. Again, this is a very, very important thing in today's life. This is not a very new thing. It's been there for a couple of years or more than a couple of years in India. But before I go to this new concept, what is this concept and why it is relevant, why I'm taking these two topics, which is slightly offbeat, but are very, very relevant in today's scenario. Why? You see, authorized economic operator concept is not a new concept, it is an age-old concept. In India and Europe, it has come maybe a couple of years back. But this concept has started by the Americans. I'm sure you must be remembering 9/11, which happened in America. And the Americans got paranoid. They were worrying if anything has to come into the country, which is the first defense? It is the customs. You must have heard that Americans are talking about equipments of mass destruction. When I say equipment of mass destruction, it is nothing but viruses, gases, which spread in the air and can kill people. Precisely what is happening today. So Americans were worrying that Saddam Hussein at a time has got weapons of mass destruction. They can send some containers into America, and the moment they open the container for inspection, the virus will be in the air and there will be a lot of casualties. So Americans authorities thought that we start a new thing, which they name as CTPAT. CTPAT, CTPAT, Custom Trade Partnership Against Terrorism. This is the name they gave, Customs Trade Partnership Against Terrorism. This is the name they gave to the new scheme. And they said that anybody who wants to sell the goods to America or to America, they need to get a certificate from their country. The factory or the owners or the manufacturers are safe, and that they called as CTPAT. And they said to the American importers, if somebody gets a certificate of CTPAT, then I will not stop their goods at the custom ports. I will allow them to come at a higher speed. No red channel. It is purely green channel. No question asked. Minimum question asked. Lot of benefits I give you. If the goods are coming from a country which is aligned to CTPAT. This what is the concept or the origination of authorized economic operator. When Americans did it, the European community thought, yes, this is an answer to most of the issues because terrorism is raising its head worldwide. It is not only India. Worldwide, it has become a pandemic. It become a problem. Every time you see there is some sort of a terrorist attack in some country. So people are extremely worried. People are extremely feeling that this is not done. What is happening? And the answer to this is CTPAT. If somebody is coming into our country's border, especially the goods, we should know they are safe. And the Europeans gave this name, Authorized Economic Operator. The CTPAT, which is known in America, is known as AEO in the European Union. And as you know, we look forward to OECD guidelines. So we go by that. Since we go by that, we have given the name Authorized Economic Operator. Now, this Authorized Economic Operator, why it has gained so much of importance in today's time? There is a scheme called ACP, already there in India since 2005. Now, anybody who is a member of World Customs Organization has to sign with the custom authorities worldwide. I'm talking about this. They have to sign with WCO that we will abide by your rules and regulations. And one of the rules and regulations is that we have to ensure that goods are safe. I have to ensure that the person from whom I'm buying the goods is a reputed person. And I am sure that there is no terrorist attack involved or any sort of a doubt that terrorists are involved in this company or any such issue is there. So there is a ACP program which was going on, which is nothing but to make the customs safer. That was the objective. Now this ACP program of India has merged with Authorized Economic Operator program, and now it has become a new norm that Authorized Economic Operator certificate you have to take from the Government of India. Now, why it has got so much of importance that I am taking it today in this forum, that this is a new concept, a worldwide concept, we should know what is this concept, that is one. Secondly, it entails a lot of benefits to the business houses. Now, one of the important things is it has become as a prestige thing, ISO 9000, ISO 2000. These type of things are there. So what are these? These are the certifications that you are at a certain level. An authorized economic operator is a license or a certificate given by the Government of India to the business houses saying you are safe, you are good. That is the license they are giving. So that is why it has got a lot of reputational value as well. Anybody who has got an AEO certificate, his reputation and the goodwill in the market goes up. Now, moreover, because of the COVID which has come in, COVID-19 which has come in, this pandemic, everybody in the world wants to import the goods which are somebody certifying that they are COVID free, no viruses. So that will only happen when they will get a certificate from the government of that country that these people who are exporting are actually authorized economic operator certified. That is why the importance of this certificate has gone tremendously up. And in near future, we will see that most of the country will make it compulsory that I am going to buy only goods from those people who are AEO certified. Otherwise, we are not going to buy them. This is likely to happen. This is a very strong belief that we have. Now I go in the depth of this scheme. The picture, the slide that you see is high risk company which are not AE authorized. They are like a car which are standing in a queue to clear the check post. But if you are an AEO compliant company, it is like a green channel. Your goods will come to the port and they will be cleared immediately. That is the advantage of AEO. Whereas for high risk company, the company which are not on AEO, they have to stand in a queue. That is the difference. So the biggest advantage of AEO certificate is that your goods can move into the country without any hassles. That is the major benefit, but what are the other issues that I will come to? Now, what is this economic authorized operator all about? Facilitate legitimate trade. The legitimate trade between the two countries require AEO certificate. Because you are saying it is lawful, it is safe, nothing to worry. Now, this program, as I said in the starting, is a merger of ACP scheme with AEO. There was a scheme run by the WCO. In WCO, there are around 180 members, and around 168 members have signed it that yes, we should have a safer supply chain. When we are buying the goods from any country, we should be having some sort of a comfort from that country by saying the goods are safe. And on the same lines, the latest buzz or the latest thing which has come in the Indian market is Karotar. I don't know how many of you have heard this word Karotar. Karotar is nothing but they have changed the customs law on certificate of origin. When you are importing the goods from any country, you have to give a certificate of origin to the customs houses. This is the country from where I am importing the goods, and that is the country of origin. Earlier, giving that certificate, it was supposed to be finalized, and the final thing, customs has to take there as gospel truth and accept it. Not the customs authority saying that if you are giving me a certificate of origin, I am not going to consider it to be a final one. I am going to ask you 10,000 other questions, and then I will come to my own conclusion whether the certificate of origin is correct or I need some more information. So that is a new thing which has come up, which I'm not covering here because that is not related to GST. So I'm not covering it here, but AU is definitely an important thing. That is why we have covered in this presentation. Now, what is the objective? As I said, the objective is there should be a very smooth and comfortable supply chain. That has to be there. Comply with security standards. The government is saying operator involved in international supply chain may obtain EU status subject to demonstrating strong internal control systems. Anybody who has got a standard security features, only to those people we are going to give this certificate. Because government is giving a certification to another country. You see this businessman or the business house or the factory from where the goods are coming is secured. The supply chain is secured. You don't have to worry. So if the government has to give a certificate on your behalf, they would like to see what are the securities do you have. See, in the past, in the movies, we have seen that there is a terrorist group which enters in a factory in the form of a labor, and then they put some objectionable thing in the goods which are exported and all that. Is there anybody who is checking the employee background? When an employee has been put on rolls at the time of appointment, any background check has been done or not? It is important. Your IT structure. Is it very simple for anybody to hijack your IT system, hack your IT system, and they can do anything they want? What security do you have? What is the physical security of your goods which are kept in the godown, finished goods? What is the security of your factory? So all type of issues come up. So before the government give you a certificate, they want to know what is the security protocols you are following. Now comes the benefit. If the government is asking me 10 things to do and prove, then my question to the government is, what is the benefit you're going to provide to me? The government is saying one of the major benefit I'm going to provide that I will not stop a good at the custom port. I will say immediately clear them. The larger time the goods are at the port, you have to pay the damages. So there is a cost involved when the goods are lower or once the goods are put on the deck. Once the goods are on the dock, after that, if you are not clearing the goods, you have to pay the duties to the government for not clearing it. So it is a very fast clearance, no penalties you have to pay. That is the fundamental thing. But apart from that, there are other benefits also, which I will take in other slides. As I said it is a global instance. WTO organization is there to which we all part of it. India is a part of WCO and we have to follow that. Now, what is the criteria for the eligibility to apply for it? It says you should have at least 25 import or export document in the last financial year. In the whole year, if you have 25 documents for import or export clubbed together, if it is 25 documents, you are entitled. But apart from that, there are certain other issues that you have to keep in mind, and that is you have to be solvent. The company should be solvent. It should not be so that you have put a insolvency certificate and you are going for an AO certificate. That should not be there. So these type of conditions are there. I will take it one by one. Now there is something called mutual recognition agreement. This is important. If the government of India gives a certificate and nobody recognizes it, no country in the world says, I don't recognize Indian certificate. Say for example, Indian doctors. If Indian doctors has to go to America and they have to do practice there or do practice medicine, they have to clear the exams. They don't recognize the Indian medical college degrees. So they want to have their own. The Indian IMA, that is not recognized there. So if the people are not recognizing the AEO issued by the government of India, then it is of no use. It is useful in India because you can import the goods at a faster pace and that's it. Apart from that, there is no benefit. So what India has done, India is on date has got 2 MRA signed, that is the Mutual Recognition Agreement, one it with South Korea and one with Hong Kong. So for 2 countries, they have signed it. What will happen with these 2 countries is South Korea and Hong Kong, whenever I'm going to export, so whatever AEO benefit they give to their people, they will give to me also because I am an AEO authorized person. Whatever benefits I'm going to get in India, that is in any case I'm going to get. So it's a mutual respect. Anybody who is exporting from South Korea or Hong Kong to India and he is an AEO certified, the Indian government will give them all the benefits that they are giving to an AEO authorized person in India. India is at final stages of talking to America and Taiwan. America is a big one. If that gets through, then majority of my exports are to a country, are to USA. So that will going to be a great boom for anybody who is going to have a AEO certificate. India is again at a detailed discussion with United Arab Emirates, Uganda, Philippines, and so on and so forth. All the Southeast Asian country, India has given expression of interest that we want to enter an MRA with you as well. So what the Indian customs houses are doing, they are expanding their wings. They are going to different people and saying, hey, look, we have given a lot of certificate to our people in India. We are judging them. We are keeping a strong eye on them that they are compliant. And then we are saying that they are AE authorized. And please, you recognize my certificate and reciprocate and give the same benefit in your country. So that is what the government of India is trying. Now comes in why the government of India is trying so hard for this. Very simple reason. With the COVID in the picture, if the countries come to a conclusion that we are not going to import any goods from the people who are not AEO authorized, because if I import, then the risk of viruses and other things coming is too high because I don't know whether they have a good supply chain or not. But if their complete supply chain is secured and given a certificate by the country government, then I'm safe. So this can happen anytime. That is why the government of India wants to have an agreement with so many countries in the world so that our export does not come to a standstill anytime. I export to any country and they will say, okay, it is India EU authorized. Please, I am willing to take your goods. That is what the government of India is trying. That we should have an agreement with most of the people so that exports can take place. And the biggest advantage of export taking place is we get the revenue. My apologies. Now this is statistics. The statistics say that in 2018, we have only 950 certificates issued by the authorities across India. They are into three tiers: tier 1, tier 2, tier 3, and the logistic operators. They were the tiers in India. Only 950 business houses or companies, if I can say so, have got this certificate. The number of licenses issued on 2019 after 1 year, it jumped to 3,534. Why it is jumped to 3,534? Because government came up a massive campaign where they were asking all the people, please come, show me your records and I will give you the certificate. This is very important. Why? If the government of India is not able to show trust to the overseas authorities, that people trust me and they come for a certificate, MRA will not be signed. No country will be willing to sign an MRA with a country which has got very limited people as their members. So what Indian government is trying, that they are trying to get as many people as a member, so the strength goes up and their bargaining power in the market goes up. This is the right time to understand what is this AEO certification. You can get it for your clients if you are a professional, and it is a very, very good thing for your company, and as a professional, it's a very good business for you as well. As a student, you should know what is happening worldwide. You should know what is the future. The future is AEO. The future is the countries may say, stop standing with the goods. If you're not authorized, if your government is not authorizing that you are safe, I will not buy for two reasons. One is terrorism and the second is COVID. If the government is saying supply chain is safe, then I'm happy because I know everything is safe. Then only I will buy from you. Otherwise, thank you so much, I will not. That is the importance of this certificate. And that is why this is important for the practicing people as well. And it's important for the student also to understand this. So eligibility applicant. Now it has got three tiers: tier 1, tier 2, and tier 3. What is the basic difference between these tiers? The basic difference is in tier 1, they says you give me your documents, I will see whether you are secured or not. And I will give you a certificate of authorized economic operator. Your documents are in place, standard operating procedures are in place, the basic requirement that is required for the safety of the company you are taking, you are safe. That is tier 1. No physical inspection being done with authorities. Nobody is coming to a factory to judge it. Only the document they are seeing and they are saying, okay, fine or not, which is a simpler way. The second, when you go for tier 2, the authorities say, okay, I've seen your documents. Now I want to come to your factory. I want to come to your warehouse. I want to come to your head office and I want to see that. What is the status? I want to check everything. So that is tier 2. When they come and say, I want to check everything, that is tier 2 certificate. Then comes tier 3. Tier 3 you will get only once you have completed 2 years as tier 2, then only you can get a tier 3 certificate. Otherwise, you will not get a tier 3 certificate. Once the certificate is given to you, whether it is tier 1 or tier 2, it is valid for 3 years. Provided there is nothing which has violated the very basic concept of AEO. If the authorities find that there are some misrepresentation being done at the time of getting the certificate, or you are not following the norms, it is only on paper, then the authorities may cancel your certificate before 3 years. Otherwise, after 3 years, again there will be a you can get it renewed. They will have a small inspection and they can renew it for another 3 years. For tier 3 and for AEO logistic players, it is for 5 years. Now, why logistics? Because the goods have been manufactured, you have given a supply chain that the raw material which I'm buying is safe. The factory where I'm manufacturing is being absolutely safe. I've got a policy in place for recruitment of people. The IT is strong, the company financially is strong, nothing to worry, everything is fine, the goods are manufactured. And where I'm keeping the finished good, that is also safe. Issue comes in, what will happen when I'm going to sell the goods? That is the time. I will require the movement of goods from my factory to the custom ports, from where I'm going to export it. That is the time the government is saying, okay, I need to see whether your transporters are AEO certified or not. And that is why a lot of transporters has taken this certificate because they knew the day will come when the industry is not going to hire them. They will say we will hire only those people who are AEO certified by the government of India. That is why you see the logistic providers are quite a bit in the list who have gone for it. Now, what are the criteria? The first criteria is there has to be an Indian entity. If it is a foreign entity, the Indians are not going to look at it. You have to be an Indian entity. Proven compliance with custom and other laws. Now, when I say proven compliance with custom and other laws, what I mean is there should be no case against you under the custom, like smuggling, clandestine removal of goods, or any other way to show that you are trying to avoid or not pay the custom duties to the government, either in the customs law or other law. If there is any case going on which is detrimental, the authorities will say we can't give you the certificate because your integrity is in doubt. That is why they say it has to be established in India and there has to be a compliance with the customs and other laws. Then you need to take a certificate from a certified chartered accountant saying the financial solvency is correct. Generally, it has to come from the auditors of the company saying that the audit we have done it is in order. Then there has to be systematic record maintenance. And then your records of your standard operating procedures, your security records, and other standards are maintained. Then only you get a AEO certificate. Now, very quickly, I will take you to the benefits of the AEO. Unfortunately, there is a urgent meeting which has come for me, so I would like to tackle the next. So I will go a bit faster from here. Now, the benefits of importer and exporter of AEO, if you see, the first one is very simple, where we are saying your goods will come under a green channel. Then there is a concept of DPD or DPE, direct port delivery, direct port import. That means if you want to export, your goods can go from a factory directly to the port and from there it get exported. DPE means when you're importing from the port directly, it will come to your factory. No stoppages. So those are the benefits that you get in tier 1. Then it says if there is any investigation has to be done, then the government is saying if you are tier 1, we will say maximum 6 to 9 months it will be over for you. I will give a green card also. If you want to come to a custom house, in custom house you see it is not easy to enter the custom house, only authorized people can go. So they say I will grant you an ID card, you can show at the custom house and you can have a hassle-free entry. If you have to give a bank guarantee, only 50% you have to give a bank guarantee, rest you don't need to give a bank guarantee. So these type of benefits are there in tier 1. But when I come to tier 2, the government is saying I will give you the refund or rebate within 45 days if you are tier 2 operator. Container selected for scanning will be scanned on priority. Your container will be taken on priority basis. The fourth bullet point that you see, that is very much important, which gives you 15 days time to pay the custom duties. Say for example, on 1st of any month you imported the goods, the government is paying that you pay by 17th of that month. Say for example, 1st of December you have imported certain goods, you clear your goods on a fast track, don't pay custom duty to the government, pay them on the 17th of the month. So in turn you get 15-16 days as a credit for payment of custom duties. This is an extremely good advantage for our tier 2 companies. You see to the edible oil industry in India. Edible oil industry in India is dependent on overseas import. We manufacture, you see, we are the largest, one of the largest country in the world to import edible oil. We do not have sufficient with us. We have only 20% of the edible oil that we require in this country. 80% of the edible oil is imported. Malaysia, Indonesia, Thailand, and other places. So we get a lot of edible oil from other countries and they come in gallons and gallons. Tonnage is too high. So if you are saying that you don't have to pay me the custom duty, I give you a credit of 15, 16 days, it is a huge, huge credit. Any import between 16th to 29th of the month, it should be on 2nd of April. If it is March, then it is 31st, otherwise it is 2nd of the next month. That is how it works. So you get the financial benefits. Duty drawback, within 72 hours you will get it. No regular PCA audits. The regular audit, that will not happen. Only it will be on-site audit will be done in 3 in 1 year. If you are tier 2. What will happen, again this is tier 2, that you will get a client relationship manager, trade facilitation of foreign country, facilitation of self-sealing of export goods. You can seal your export goods on your own. Faster SVB completion. Bank guarantee in tier 1 it was 50%, but when it comes to tier 2, it becomes 25%. If I have to pay $100 a bank guarantee, if I'm a tier 1, if I'm not a AE authorized, I have to pay $100 to the government as a bank guarantee. If I am tier 1, then I have to pay $50 a bank guarantee. But if I am tier 2, then I have to pay only 25% of the bank guarantee to the government. So these are the benefit of tier 1 and tier 2. Now, important thing is, can I apply for tier 1 and tier 2 together? Or that is not allowed? Because as I said, tier 3 you will get only once you have completed a number of years as tier 2, then only you are eligible for tier 3. But can I apply for tier 1 and tier 2 simultaneously? The answer is affirmative. Yes, you can do it. The benefit of AO for tier 3. If I go on a bank guarantee, no bank guarantee is required to be furnished. No screening is required. Only under investigation. If the government has got some information that there is something wrong going on, only in those the government will come into picture, otherwise no inspection is done. Rebate refund you can get 45 days in tier 2, here you will get in 30 days. Now this, I'm not reading it out, I'm just leaving for you to have a look at it. It is a comparison of tier 1, tier 2 and tier 3 benefits. What type of benefits you get if you are in tier 1, what type of benefits you get if you are in tier 2, what type of benefits you get if you are in tier 3. Tier 1, you see, if you can just quickly look at it, bank guarantee. Tier 1, 50%, tier 2, 25%, tier 3, nil. Dispute resolution. Tier 1 in 6 to 9 months. Tier 2, 6 months. Tier 3, 6 months. Duty drawback, 72 hours. Tier 3, earlier, much faster than that. Post clearance audit, once in 3 years in tier 2, where if you are tier 3 or intelligent information only, otherwise there is no audit. Now we come to the application process. Now on this slide that you see, there is a new tier 1 and old tier 1. What we are trying to depict, the law has changed. They have changed the tier 1 application form. In old, there were a lot of things they were asking, but in tier 1, they are asking only 2 things: general compliance and legal managing commercial record and financial solvency. Only these things you have to provide and you will get a tier 1 license. Now in tier 2, they say you have to provide this much, tier 3 this much. logistic operators, so and so. Process map, security plan, general compliance. I will go up to them very quickly. So these are the different annexures that we have to prepare and we have to give to the government at the time of the application. The application form is basically a general information. Security plan is different type of security they are talking about. Physical security, documentary security, procedural security, and so on and so forth. Process map is different type of process that has to be followed. Then the site plan, external site plan, internal site plan, and when they come for a inspection, they see, okay, you have got a camera out here, okay, you are saying that you have got a card with you, entry card, then only people can come in. That is very good. Then what they do, they will ask the officers of the company to sit in a room. They will ask them, please sit down. And then they go out and they catch hold of any of the local employee labor in the factory, and then they will quickly ask them, Acha, when you come into the factory, what you do? Do you swipe your card? What type of security procedures you follow? Now, if you are not following those, the local person will only say, what security, sir? I come into the factory, I'm secure. I do my work, I go back. Whereas in my SOPs, we have written in detail, the person if has to enter into the room, he has to sign there. If he's taking the goods out, he has to sign there. He has to follow this. That is the security. That is other security that we have. So they will come to know immediately that what you have written is not true. So that is why as a consultant, when we get this certificate and when the people come for inspection, we do a mock training, mock inspection for the clients. We train them. You look, this is what they're going to ask you. This is what is written. You have to follow all this. It is not that we are saying you don't follow. We are saying you have to follow. If you are not following, you have to follow only, then you will get it. And ask your people to follow. Ensure they follow so that when somebody is going to ask them, they can stand up and say, yes, we follow this. This is what we do. Earlier we were not doing, but now we do this. So that is how you get your inspection completed and you get the certificate. This is a detail of the general compliance. I'm not reading one by one, but I'm showing it on the slide. This is the legal compliance. Now, legal compliance is important from the standpoint that there is no show cause notice, no clandestine removal of the goods, no frauds, no smuggling. This all they want to know. Any dispute regarding the duty in the past, duty drawback dispute and so on. This is legal compliance. Management of commercial and transport records. This is regarding the procedures. What procedures you are following, how you are maintaining your records. This is a financial solvency certificate where I strongly believe that practically when you go for it to your chartered accountant and asking for a solvency certificate, this is one of the tough things to give because it takes some time. People are generally not very pleased to give this type of certificate. It has to be a detailed study, then only they give a certificate. Because by giving this certificate, whoever is giving is saying the company is absolutely fine, financially strong, nothing, no issues are there. Tomorrow, if the company goes bankrupt, if the company has a lot of hidden costs, lot of cases going on which they have not shown, and I have given a certificate the company is solvent, then I also become a party to it. So in general, in practice, getting this certificate takes some time because the chartered accountant who is going to give you the certificate, he will take his own sweet time and take his own measures to ensure, yes, I can give it. Safety and security standard, procedural security, premises security, cargo security, conveyance security, all those things. Now this is personal security, loading, unloading, how you are doing, how integrity is there. Premise security, fencing, gate, even they see what is the height of the building, how many ventilators are there, because there has to be ventilators for the Factories Act. Now they want to see the Ventilator is too big, the people can come in and go out from that ventilator. How many lights you have put in? How many cameras you have put in? So these type of the premise security is required. Cargo security is important. Conveyance security is again important. That is why we get the authorized logistic, AU authorized logistic people for conveyance of the security of the goods. This is personal security, business partner security. Business partner security is again something which is very important. If I am selecting a business partner, I need to know whether in all respect he is secured or not. It should not happen that I shake hands with somebody who is not a good business partner, who does not carry a good reputation, or who has got a past record which is not very good. Security training and threat awareness. On a regular basis, we should have a security training for the people, different personals, so that people are up to date what type of frauds are happening, how we have to ensure that we are secured. Because Government of India is giving a certificate on your behalf, so they want to see each and everything. And once you get all the certificate, this is the type of certificate that you get. This is example of Benedict Coleman. This is the certificate that you are secured and you are fine. We are giving you a certificate of recognition. That is all from my end today. Thank you so much, and I'm open for any question that you may have.
Thank you, sir. Participants, you can post your questions in the chat box or in the Q&A. So I guess the participants are not having any questions. We have no questions as far. Okay, so there is one question. Question is of Mr. Amir Khan. He's asking, is merchant exporter can apply for AEO?
No, he can't, because he is not a manufacturer.
Okay, sir, AEO is applicable to SEZ.
Sorry. I got it confused with MOOWR. MOOWR you can't. Oh, yes, you can. And one should. If you are a merchant exporter, you should have this certificate.
Oh, thank you, sir. Another question is of Bala Gopalakrishna. Sir is asking, AEO is applicable to SEZ.
No, see, AEO anybody can get. Whether you're in SEZ, you are AE, a DTA business, or EOU, anybody can get the AEO certification from the government. It is not compulsory as on date in India, but what I was trying to put tomorrow, it will become compulsory across the world.
Okay, sir. Thank you, sir. So next question. Next question is of Sandeep Pathak, sir. He's asking, this one-time lock concept means the physical lock or digital one?
Physical lock.
Okay, these are all the questions I can see. So before
you can collect other questions as well whenever they come, and you can post it to me and I can reply.
Sure, sir. Thank you so much, sir. Before we end the session, I take this privilege to thank our eminent resource person, CA Prashant Raizada, sir, for explaining the tedious and complex concepts of MOOWR, that is manufacture and other operations in warehouse regulation 2019, and AEO, authorized economic operator, in a very simple and elaborative manner. As Sanjeev sir mentioned about your specialty to discuss the complicated concepts in the very easiest way, and we learn and we don't even realize. Thank you, sir. And I also take the privilege to thank you on behalf of the Ramanujan fraternity, our principal sir, Dr. S.P. Agarwal, and Indian Accounting Association, Dr. J.L. Gupta sir, Dr. Rekha Dayal ma'am, Dr. Anjali Gupta ma'am, my fellow colleagues, Dr. Purushottam Arya, and for giving us the chance to listen to you. It is a great honor and privilege to listen to you, sir. Thank you, sir.
Thank you so much. Thank you.
For all the participants, we are ending the session now and we will continue tomorrow. Thank you.
Shall I end the session, ma'am?
Ji, sir?
Shall I end the session, ma'am?
Sir, you are not audible.
Should I end the session?
Yes, sir. Yes, sir. Please.
Okay.
Thank you.
But host is you, ma'am.
Okay, so
think you can-
I do, sir. I do, sir.